everybody. Senior Analyst Kyle Custer here, and I was thinking about what we really haven't been talking a lot about, and it's how Seafried and Brew looks at a bank. Now, of course, we offer many analytical products, and we're always coming out with new ones, and in fact, this is one of our newer ones, the Snapshot Report. So with the second quarter numbers out, it's time to really think about what happened last quarter. And this is a great example of how we've produced a report that allows you to very quickly look at some of the key numbers and components at the bank and at the benchmark and peer group level in comparison with this report. So what I want to get into is a little sample bank that I put together and show a few of the key indicators that we like to look at and how we approach just a quick quarterly analysis. These are available on our site, and it's a very, very useful tool. And throughout the next couple briefings, we will get deeper and deeper into our other analytical components that we look at, as well as, of course, our the quintessential Seafried and Brew risk index. So what we first want to look at is how we divide up the groups. So with this report, it's automated, and we have our community bank defined benchmark group, which is banks between $100 million and $5 billion in assets. Pretty simple, cut and dry. It's just kind of where we feel the community bank is defined. We filter out a couple of those industrial banks and the banks that are owned by Macy's and Target. Then the peer group is going to be the differential, in this case, of about $50 million in assets, plus or minus. So we're taking all those groups, or all that benchmark group, and looking at the banks within the United States in a smaller asset group range. So over here, we have a little bit of a longer-term trend looking at key components such as return on average assets, return on average equity, net interest margin, net overhead. This gives you a good idea of where you were for the last couple of years and, of course, the last couple quarters. So in this case, there's a few, well, I don't want to say red flags, but things that really draw my attention to this particular bank, one of which is being these non-current loans to total loans ratio. Now, it's good. This bank has seen a decline in that particular category. However, as we'll see in the next couple of pages, these are obviously very high levels of non-current loans. Their income has fluctuated a little bit, so these things are key components that we look at just from looking at this one page. Now we get into one of our newer additions to our reports is a distribution chart. So you really get to see where this particular bank has been performing. The red dot represents this bank that we're looking at. So they're actually performing from a return on average asset standpoint above the median, and you can see the distribution that they're actually performing relatively well. Same goes for net interest margin. Their net interest margin is around 4%. You see them on the distribution scale. They're around the 75th percentile in terms of net interest margin. So that's pretty good in comparison to the median, which is around 373. Other things we look at, we don't particularly like, of course, extraordinary gains or, extreme security gains or losses in any particular quarter. So here we're looking at that, and this bank has not had any realized gains or losses. So they're kind of on that flat line in the benchmark. So we're not seeing any huge fluctuations in that return number that we saw earlier. And of course, here we're looking at tax burden. Their tax burden is a little high. They're at 32%, and the median is sitting around at 30, and of course their peer, which represents the green dot, is around 24%. So we were talking about that non-current loan number earlier. These two pages here, we'll zoom out so you can see them both together, are our summary statistics pages. Great little cheat sheet if you really want to see where your ratio lies in comparison to your peer or benchmark group. So in the case, let's find non-current loans. That's down here. Hopefully we can zoom in pretty good here. Okay, that's pretty good. So there's that 597 we were looking at last time. And we're looking at the benchmark and the peer group down at 1%. So this bank is, might have a few loan issues, but like I was saying, from the earlier page, we saw the trend was improving. It's definitely a good sign, but of course, something to focus on. Another good ratio that we always look at here, net overhead. Their net overhead is performing better than their benchmark and on par with their peer group around banks with very similar size and assets. So this is what we call our snapshot report. And again, it's kind of a quick example of what went on this particular quarter. The one page does give you a little trend, but in terms of our reports, this is definitely our quick and easy report. It gets to the point. If you'd like to check one out, I'll have this sample on our website. I'll include a link in the briefing this week. And next week we're going to get a little more deeper. Jamie and I are going to talk about some of our other reports and choosing that competitor that really, that next door neighbor bank, and looking at their numbers as well and comparing to how you're performing. So thank you very much, and I'll see you next week.